and running us through all of that. Good luck to you. Now, Titan is the next company that we are speaking with. The revenues for Titan are up 14%, but there is a miss on the margin front. Third quarter EBITDA is also lower due to a 200 basis point compression in the jewelry segment. Mr. Ashok Sonthalia is Chief Financial Officer at Titan, and he's joining us right now to take some questions. Mr. Sonthalia, thank you very much. You know, the last time we spoke, bulk of the discussion was on two things. One was whether there is generally some slowdown that you're seeing at the lower end. And the second was on competitive intensity, margins, etc. How would you characterize the growth that you've seen in the context of both those elements?
So, good morning and thank you, Prashant. Quarter three started very well with the festive season. You know, the October month did extremely well. And it is typically after that season ends, some slowdown do happen. And this time also with the rising gold price, we saw some, I would say, demand volatility, people sometime holding up. But overall, 15% retail sales growth in quarter three is quite satisfying to my mind. And we are happy with that performance.
Mr. Sonthalia, good morning. So when you say that there was some slowdown in demand, is it a function of perhaps higher gold prices, as you said, and has that continued to impact the January-February quarter as well? Because gold prices were peaking even in January. So is it gold prices that's keeping people away, or is it also competition? I mean, is there any hint that perhaps there's some sort of fight for market share?
No, I think as far as competition is concerned, we continue to kind of gain market share. So that concern is not there. Of course, we also kind of remained pretty competitive through our offers, through our marketing campaigns, new collections, etc., throughout the quarter three. So competition is not worry for our slowdown. It was generally consumer sentiment because of a higher gold prices. But in the month of January, we say people have now taken that in stride, that the gold prices are higher, may expect to be further higher. So now they are coming back and kind of concluding their purchases for whatever necessity they have, wedding included in that.
So that
has been good.
Okay, got that, sir. Got that. You say that you're actually gaining market share, and that competition isn't, isn't a concern right now. Can you quantify that? How much is the market share gain?
It's slightly difficult, but now we believe for the entire industry, we have inched towards 7%. Maybe sometime back, year or 2 years back, we were around 6%. The indication how we get is that new market share in our buyer growth, about 49% this quarter compared to 48% of the last quarter. So we continue to see traction of getting new customers to our jewelry segment. And that gives us confidence that all these new customers, part of it definitely coming from competition to us.
All right. Hi, good morning, Mr. Sonthalia. This is Nigel on this side. In the past, you've mentioned that you want to take that market share to double digits, which effectively would be around 10%. Do you see it happening sooner than 2027 that was initially laid out as a target? And also your studded part of your business, studded share, it was at around 26%. Whenever you've been joining us, you've been telling us that maybe that number heads up. What should be the rough band that you're looking at in terms of a contribution from that part?
So FY27, the growth ambition which we have put out, and we think it is reasonably in our reach to kind of achieve that. And typical industry long-term growth, if you bake that we believe by FY27, our market share should be 10%. But a lot of variables there, but that's the ambition, that's the estimate, we should be there. As far as studded share going beyond whatever it is right now, we are definitely leading diamond jewelry player in the country. And we believe diamond jewelry penetration in India is still at a low level and should be improving. And then we should able to and we as a player has a role in kind of improving that diamond penetration in the country. And through that, I think it should inch up. But while other categories are also growing pretty well for us, So sometimes these numbers become outcomes. So in absolute value, studded is of course growing, but in 3-4 years horizon, I definitely think that studded can inch up from its current contribution to our revenue.
So Soundarya, could you give us a number from this mid-20s? Do we see it go to 30s? So we do mid-30s? I mean, what should the outlook be? And the budget also announced some incentives for lab-grown diamonds. Will this impact real diamonds?
So if you are aware, 1 year back, we invested in a US lab-grown diamond jewelry company. We picked up a minority stake. We see that, and US is the most exciting market at this point of time for the lab-grown diamond jewelry. And that is where we wanted a ringside view of what's development happening in the US market, how consumer is approaching lab-grown diamond, etc., etc. I think in India also it will start making entry, but we say not as a substitute to natural diamond to begin with. 5 to 10 years, there could be some traction, and we will be ready to play that game because we have made this investment and our understanding of lab-grown diamond is pretty good at this point.
And studded business, sir, you didn't give us the number.
I think it should go towards 30%. I would not expect it.
By when?
Very difficult to say, Nigel, but yeah, it should inch up, and that's our desire also, because in any case, profit-wise, it's a slightly better profitability compared to gold jewelry.
And I like the characterization of diamonds, right? It's lab-grown diamonds, not versus real, versus natural. Because diamond is a diamond.
Both of you gentlemen, may I just offer some unsolicited advice? Anniversaries, birthdays, might want to stick to natural stuff.
When there's only limited you have, there's only limited you can spend. So,
but Mr. Santalia, so when we spoke in November, you had said that across your categories, on the entry level, things are going poorly, and you said that you expect a slowdown for 2 to 3 quarters. Can you tell us if that is still the case? Has that intensified, gotten better?
No, so that is still the case, Prashant. We see the entry level consumers are still finding it difficult on spending on the discretionary. I think that's the most affected category and the consumer set from the current inflationary environment, high interest rate environment where EMIs are going up, etc., etc. So we continue to see that pain into our entry-level watches, our entry-level jewelry. Their growth rate are not what the premium segment is witnessing. And I do expect that to continue, as I said last time, to 3 more quarters.
Mr. Santalia, just a word on the margins as well. They have dipped across segments. I mean, the dip is more pronounced in jewelry, even in eyewear. I mean, there is a dip. I'm talking about year on year. Even watches, there is a minor 50 basis points shaved off. Do you see this as a trend, or do you think you can make up in Q4 and beyond? And again, at the headline level, what's the margin outlook that you have at a blended level?
So we always maintained this, when we were even delivering higher margins, sometimes there were one-off items helping us. In last quarter 3 also, we called out that 1% was one-off item in the Q3 of last financial year. So from that perspective, margins have not taken a significant drop. We have been talking about 12 to 13% margin with an industry-leading growth rate. And that's the operating philosophy. When the demand is good, environment is good, we want to chase growth at the stable margin, which is 12 to 13%, we believe is a good margin to target for.
All right, Mr. Santalia, we'll leave it there. Good luck to you, and thank you so much for having the conversation with us on the back of the earnings. Thank you indeed. Adani Enterprises is now